I will outline the December 2022 financial results and guidance for the following two periods. In the financial period ended December 2022, JPR recorded operating revenues of 18.739 billion yen, operating profit of 9.273 billion yen, and net profit of 8.469 billion yen. DPU of 7,750 yen was declared, which was in line with the initial guidance. For the June 2023 financial period, our guidance on operating revenues is 18.11 billion yen, with operating profit of 8.76 billion yen and net profit of 7.99 billion yen. DPU is forecast to be 7,600 yen, same as our previous guidance. DPU for the December 2023 financial period is forecast to be 7,600 yen. Even though capital gains from property sale will no longer contribute for the period, our internal reserves will be drawn down to reach the same level of DPU that we paid out in the June period. This is the status of our occupancy. The occupancy rate based on concluded contracts for the December 2022 period marked 97%. It was partly due to tenant departure in Gotanda First Building that we divested at the end of the year. However, the occupancy is expected to improve to 97.3% in the June 2023 period. The occupancy rate based on generated rents is on track for gradual recovery after bottoming in the June 2022 period. This is our external growth strategy. Our key sponsor, Tokyo Tatemono, has its medium-term management plan running from 2020 to 2024. The key priorities in their plan include expansion of property sales to investors and reinforcement of the fund business. With the support of our sponsors, JPR's growth in its AUM has been accelerating over the past few years. In fact, its asset values have augmented by 57.5 billion yen since 2020 on the net basis as a result of asset acquisitions totaling 84.5 billion yen. This is a significant increase compared to the prior years. Let me explain JPR's asset replacement initiatives since December 2022. As described on the left-hand side, JPR swapped some assets with its sponsors, Tokyo Tatemono, as well as Yasuda Real Estate. The assets that we divested had challenges in securing consistent income in the future. Therefore, they were replaced by the ones in more favorable locations, such as Shinjuku Center Building in central Tokyo. Some other assets we acquired are also located in prime areas in key regional cities. As a result, the quality of our portfolio and income generation have been enhanced. On our financial strategy, a total of 8 billion yen was financed in the December 2022 period. The average duration was 6.3 years. Trends on domestic rate hike are drawing attention today. In our view, however, the impact should be minimal on JPR in the short run because of low LTV level and our endeavor to extending and diversifying the maturity schedule. I want to give you some update on utilities costs. JPR has been no exception to be challenged by energy cost inflation and subsequent earnings deterioration. Incremental costs are mostly the consequence of fuel adjustment charges. As illustrated by the pie chart on the right, the billings based on fixed unit price used to account for nearly 40% of total. Since autumn last year, most of those billings has been shifted to combined arrangement of fixed and variable prices. Therefore, measures have already been in place to counter the spike in fuel adjustment charges. Finally, I want to discuss our DPU strategy. JPR's immediate target for the adjusted EPU is 7,600 yen. However, due to the adverse impact of the energy cost inflation, it may take longer than 2 years to reach this target against our initial projection. We still aim for faster progress driven by occupancy turnaround and external growth. Meanwhile, abundant internal reserves will be tapped in order to ensure consistent payout as we set the floor DPU to be 7,600 yen. This concludes my presentation. Thank you for your attention and support.